Good morning. Morning, folks. Hopefully you're awesome and well on this wonderful Wednesday. Well, politicians are at it again. Well, that's nothing new, is it? But we'll talk about that in a minute. Let's have a little chat a bit later on about what's going on. But before we get cracking, big good morning to Tim, Alison, Donna. Hey, good morning, Kylie. Great to see you. Aaron, Kelly, how are you, mate? And Luke's all the way in from Mansfield. My dad, Luke, used to, many years ago, my dad's 70 now, he used to shear in Mansfield, Victoria. Is it Mansfield, Victoria, Luke? But it might be Mansfield somewhere else. Anyway, a little bit of a tidbit along the way. Tanner, good morning to you. Great to see you. Alexis, hey, thanks for joining us. Another Wealth Coffee chat. Melinda's here as well. Hope you're well, mate. Back at you. Yeah, there you go, Luke. Yep, my dad's old stomping ground back in the day. Anyway, there you go. So, Wealth Coffee chats. We do this each morning. Most of you know this. Got a little bit of a croaky throat today. Don't know what's going on. But hopefully it doesn't sound too bad. Do the intros while things are getting going. Do it every morning, 10 past 8. You guys know that. Jason Witt's my name, if you didn't already know. But what are we going to talk about today? Today, let's talk about something that Andy Fenton and I call the number one menace. The politicians at it again, messing with our money. They like messing with our money, don't they? Because it's not theirs. It's easier to mess with your money rather than their money. But let's have a chat. Let's have a look at what's going on. Here we go. Oh, let's see what's happening here. Superannuation shakeup. Albanese government announces that they're going to make some changes to super, taxing super. And we'll talk about tax in general in a minute as we go. But tell me, folks, in the chat, what do you know about super? And the tax rates in super. In general, in our own personal world, you as an individual, we're all taxed as entities. I don't know if everyone knows this. There is a personal tax rate. Personal. There is a company tax rate. There is a let's call it other entity tax rate. Let's just call it super. And there's actually a trust tax rate, right? Depends on. Now, trusts are a little bit more complicated. Yeah, one person's got 540 million in their super. How's that, Alison? You know, that's a good effort. You know what I'd like to know? What question? What you know what I'd like to know? I would like to know how they did that. How they did that. Because I would be really interested. I'd be really interested. All right, well, let's have a look at this. Tell me in the chat. Luke's already on this. 15% tax rate, folks. 15% tax rate for super. Anyone know a trading company? There's two types of companies. There's a non-trading company and a trading company. But what's a tax rate for a company, folks? Do you know that one? There's two tax rates, technically high level at a company. Chuck that in the chat for me. What's the personal tax rate range from or range to? Tell me that one as we go. And really, the trusts, a trust, if you leave money in a trust, it gets taxed at the highest tax rate, which is 48.5, I'm pretty sure. Anyway, I'll just double check. I've got a little thing here. The highest tax rate. They might have dropped that. But anyway, it keeps changing. Right, so you get the highest tax rate in trust because you've got to distribute the money to the ultimate owners of the assets. Does anyone know the company tax rate? If you don't know, I'll tell you. There's two tax rates. There's at the moment 25% for a trading company, and 30% for that's trading, and 30% for a commonly known as a bucket company or an asset company or something like that. And personal tax rates at the moment, they range anywhere from 0%. Did you know that there's a certain amount of money that you can earn at 0%? Okay. And that is around about $18,000, up to, call it sort of 45% personal tax rate. 45% personal tax rate. So there you go. All right, there's the tax numbers. Bit complicated in this space, but what is the proposal right now, folks? What's the proposal? Is this one here. Now, Luke said 15% for super. Now, super earning money in what's called accumulation phase, which if you are right now, and let's have a bit of a look at this over, let's zoom in here. Let's say, your super starts at 20 and it finishes over that 4 years. Every time you earn money in the past, previously, every time you earn something inside of a super fund, the super would be taxed at a 15% tax rate. Okay. 15% tax rate. Now, the proposal, there's not a lot of details on this proposal just yet. So this is called accumulation phase. When you're not retired, the proposal is to double. How's that, folks? Double the tax to 30%. Now, there's the kicker, which I think is actually, you step back, it's a smart move politically by the Labor government. But anyway, what's the balance that they're proposing that it kicks into double over? Folks, tell me the number. Does anybody pay attention this morning? How much money in your super as an individual, do you need to have to kick over into a 30% tax rate for accumulation? Now, I do wonder if after accumulation, it was 3 mil, Alison. They're right. Okay, 30% for 3 mil. So the devil's in the details here. There's probably a bit of a beat up going on, but it's $3 million. But before that, it seems that you'll be still taxed at 15% under $3 million. Now, like Alison said before, check this out. One person in Australia has 540 mil. I'd like to know how they did it. However, most Aussies do not. Most Aussies do not. Folks, most Aussies do not have more than $3 million in their super. And at the moment, it would affect about 80 taxpayers, 80 individuals, 80,000, not 80, 80,000 individuals in Australia. But you know what? This is the interesting question. How did those 80,000 people get 3 million? Now, I lay this challenge at your feet. I dare you to get $3 million. I dare you to be complaining that you're getting taxed at 30%. Let's have that as a goal. Because I can tell you what, it's not that easy to get that money into super in that way anyway. But I agree with Alison and others with the commentary. Seriously, the changes, you as an individual make some decisions based on the rules, play within the rules, and then they change the damn rules. I think it's absolutely deplorable personally, but there's nothing you or I as individuals can do about this, but all of the political parties do it as you go. All right, I've got a little spammer here, so I need to block them. All right, block that person. There we go. All right, so so Tim, there is a which is good. So Tim's asking a question. What was the 1.7 mil? Let's talk about super. Let's talk about. I think here's what's happening, folks, and just so we all know, this is kind of an election play. This is an election play. Yeah, they're making the move. They're going to raise $2 billion. They say they're going to patch up a $30 billion hole in the budget. They'll raise $2 billion for the next budget, and by and large, it's not going to affect a lot of Aussies. And by and large, the voting pool of those Aussies aren't really. The Labor's backing that Liberal won't make a big fuss about it. Anyway, I'm not going to get into the politics of it. But it's a political move. Hey, morning, Brendan. Now, let's talk about that. So Tim asked a good question. Let's talk about that. Right. So this is the stuff we need to know, folks. You and I, as Aussies, as people, we need to understand what's going on out there in the world of our assets, our wealth. If you don't pay attention, politicians, banks, everyone's going to diddle your dough. Put the hand in your pocket. Like, what's going on? If you're not paying attention, it's going to happen. So, for most of us, the first opportunity, folks, is to get our super balances, let's say, over a 40-year working period. Why do I keep dropping out? Oh, damn it. This internet, damn Telstra. How's that for a business? You can be a terrible provider, but they're the biggest business in Australia. Anyway, hopefully it picks up. Belinda, apologies. I'll keep going, and we'll see how we go. Over a 60-year period, that's 60. I'm going to rub that out there and put down here. Over a 60-year period, we want to be able to start from zero. We start from zero, and the first level we want to get to is $1.7 million. All right, and that's going up and up and up over time. So Tim asked, "What's this 1.7?" Well, 1.7 mil is the amount of money that you can. Well, if you got 1.7 into a super fund in the right way with the right sequences, that would be the amount of assets that would be tax-free when you put it into retirement, when you retire. There's some things you've got to do. So, if you want to know the nitty-gritty details of this, obviously speak to your financial planner or the right accountant. But this stuff is available on the ATA website, and we can talk about it because you and I, as Aussies and individuals, we need to understand this stuff, right? If you have a plan and you were clever and you did well, you could get assets into your super. That's great. However you do that is up to you. But if you had a balance of 1.7 and then you retired, your income from those assets plus if you sold those assets up to a certain portion, would be tax-free. Now that I didn't hear anything about that changing, Tim. So that's still on the cards. That's still on the cards. But let's say over time, let's say you did get your 1.7 million here, and now it's worth 3.5 mil, right? The clarification will be, which bit's tax free, which bit is taxed at 30%. Is it only an accumulation phase? At this moment in time, there was nothing said about retirement phase. It was only an accumulation phase. So, the devil's in the details, folks. In essence, as far as I can see, it's a grotty tax grab based on 80,000 people who've got more than 3 million in their super as of today, right? Because it's a change that they want to affect the budget with in 2024 or 25, right? That's what it looks like. So anyway, there you go. Tax rates, though, the game of tax, when we play this game, folks, is a game of 30, right? A game of 30. It's a game of 30, right? Game of 30. Game of 30%. Because if you have a look at this stuff, and I'm running out of time today. I think I rabbited on a bit too much, but I'm going to show you guys here. Listen, over here, if you earn, and this is a simple calculator that I use, it's called the cost of your problems. And these, I just realized that was the 2018 one. So it's actually a little bit better now, actually. So you can earn up to about $175,000. And your cumulative tax rate. So, folks, up to $175,000, the actual percentage of tax, not your tax rate. I hope everyone understands that. When you say, oh, I'm on a 40% tax rate. No, you're not. You're in a 40% tax bracket. It's a tax bracket that goes up depending on, if you look here, and it's a bit different now. I just realized I opened the wrong one, but the idea is the same, right? Over income brackets, it goes up, okay? But accumulatively, as a percentage of your earnings compared to the money or the tax that you paid, it's a gross percent, right? So up to $175,000 as of today's tax rates is around about 30% you would pay in tax, right? So as an individual, as a person, let's see if I can draw that properly. As an individual or as a person, you earn the money, right? You pay the tax, and then you get to, you get to live on. I'm drawing on something and I'm realizing you're not even seeing it. So let's have a look here. Let's put that up. So, you earn the money, you pay the tax, and then you have to live off what's left over, right? Let's say in a company, or this is where you have your expenses, like this is cost of life. If you earn money as a company, right, what you do is you earn your cash, earn your money, you pay for your expenses, right? Then you get taxed, and then you live off what's left over, okay? You make a profit or whatever it might be, okay? And then over here, super, very similar to any company. You earn the money, you can offset expenses. So, if you have expenses inside of your super when it comes to investing, they can be offset. Then, you are taxed, and then you have what's left over, right? That's kind of how it works. And if smart people go, listen, if I'm paying 30% and my super's paying 15%, wouldn't it be clever? Wouldn't it be smart? Wouldn't it be useful for me to put money over into my super before I get taxed? Because you can. What's it called? It's called a concessional contribution. So you can up your contributions, and instead of being taxed at, let's say, average 30%, you're taxed at 15%. Okay, hopefully that made sense. the game of 30, a matrix thing, right? So what the government's doing is saying, hey, listen, all of you high earners, high income earners who are using that as a bit of a benefit over 3 million, so it doesn't affect, most of us. Over 3 million, we're going to tax you at the 30% rate. Okay? That's what's going to happen. Anyway, there you go. What do you think, folks? Let me know in the chat. How do you feel about that? How do you feel about the government just making shit up as they go along? It hasn't gotten through yet, by the way, but I'm sure it will. I think it's a political move that yep. Who knows if anyone will wind it back? What happens, Brendan? Unfortunately, doesn't matter which side of the fence they're on. Once there's a tax revenue in play for the governments, they tend not to wind it back. What often they will do, yeah, we will be discussing this on Friday for sure, Alison. Hey, morning, Kevin. Good to see you, mate. What they do often, Brendan, is they'll make a tax cut somewhere else. So company tax rates have gone from 30% to 27.5% to 25% of recent times. Okay. Yeah, there you go. All right, folks, that's it from me. I think we're done. Wealth Coffee Chat. Anyway, yep. Well, that's right. But I think, Luke, for most of us, and this is where we all got to make sure we understand the details. I think for most of us, we would struggle to get $3 million into our super. We would. So it's probably not going to affect many of us. Okay. And if it does, it's kind of like all right, fair cop. I hate the idea of, politicians messing with stuff where they set the rules and then later on they catch you. Yep. I'm with you, Brendan. Yep. All right, that's it, folks. That's today's Wealth Coffee Chat. Spread the word. Keep an eye on your money because no one cares about it more than you do. If someone else cares about your money and retirement more than you do, you're in trouble, folks. You're in trouble. Anyway, there you go. Anyway, I better call it done. Wealth Coffee Chat over and out. You guys be awesome and well. Join me tomorrow for another one if you're up for it. 8:10 weekdays. Let's do this, and we'll make sure we have a good time. Anyway, folks, that's it. Wealth Coffee Chat done and dusted. See you tomorrow. Bye-bye.